What's up, guys? My name is Connor King with Resolute Capital. So if you've spent any time investing into the stock market or even any time researching it, then you've probably found that there's so much information out there and so many things to think through. We hope that channels like ours and others will help you think through what strategy is best for you. Today, I want to explain and discuss the difference between the two strategies of investing for capital gains and investing for dividend payments. Both are great strategies, but there's a lot you need to know about both of them to decide which one is best for you. Let's get into it. If you're excited about this video, please give it a thumbs up and subscribe to our channel where I post 2 videos every week. Also, this video is for entertainment purposes only, and you should always consult a professional financial advisor before making any decisions with your money. So what are dividends? Well, first, you can check out some of our other videos on our channel to learn more about them, but I'll give you a brief overview here. So some companies, usually companies with a lot of cash, pay portions of their earnings on a regular basis out to their shareholders, which is called a dividend. The regular dividend payment is not dependent on the performance of the company's stock or the stock market as a whole. However, while it is rare, companies can at any time decide to quit paying dividends or just to lower their dividend payment. So the average dividend yield, which is the amount of the dividend payment relative to that stock's share price, has been about 2% for the S&P 500. For any given company that you're interested in, be sure to check their historical data to find their dividend info. And a company like AT&T, for example, pays out a dividend around 7%, which is one of the highest out there. So now let's look at the other side of the coin, capital gains. What are capital gains? Well, capital gains are the increase in value of a stock or any asset for that matter, after it was purchased. So with capital gains, there can also be capital losses. And so now let me give you a very simple example. So I buy 5 shares of a stock at $100 each. Over 5 years, they increased to $200 each. Now the total value of my investment increased from $500 to $1,000. The catch is this $500 increase is not actually $500 in your pocket until you sell and realize your gains. So now we're going to act like we're arguing that dividends are better. So dividends are consistent and can provide a calculated income stream over time. A high dividend yield investment provides you with a good return even if the company's stock is underperforming. A recession or downturn in the market can quickly deplete your gains that you have into a stock, but they can't take away the dividend payments that you have already received. So now I'll do an argument for capital gains. Oftentimes, some of the stocks with the most growth potential are not mature enough to pay dividends. So in this case, even if the stock returns 20%, I'm sure you won't be complaining if you didn't receive a dividend because 20% is a great payout. Capital gains investing requires that the investor be well-versed in the health of the overall company because you're investing in it to get the capital gains. And if you're a dividend investor, you may be tempted to just go ahead and buy into companies that pay a high dividend. While this might be good for the dividend, you still may end up with large losses, which would then eventually net out all the money you've received in dividends, so that would be a bad idea. While it's definitely possible to create a substantial passive income stream from dividends, normally the most returns you see from investments in the stock market come from capital gains. So overall, you need to look for both of these. It's probably not the best idea to just pursue either dividends or capital gains. You need to find a healthy balance of both, and depending on the stage of life you're in, you might be more suited for one or the other. And also, one great thing you can do with dividends, if you don't need the actual payments as an income stream, is you can reinvest them back into the company's stock so that you can have greater capital gains and greater dividend payments in the future. So just analyze where you're at in life, but overall, you should try to find both. I hope this video has helped you, and if you already knew a lot of this material, then we would love it if you would leave some personal insight into your strategy below in the comments. And also, if you have any questions about this, please leave it in the comments below as well, because there's so many strategies out there and it's very rare that one is right for everyone. And so it's great to have other people's feedback to help you decide which one is best for you. Thanks for watching this video. If you enjoyed it, please like it and subscribe to our channel where we post 2 videos every week. See you next time.